Good morning, good morning. How you guys doing? Welcome back. Tuesday. Yesterday was a Canadian holiday. It was Canada Day. So we did a little celebrating here in Muskoka. And did some fireworks last night. Went and bought some fireworks to shoot off for the family, which was fun. And now back in the saddle, looking at the markets, and going to do an episode where we're going to look at some of the currencies. We're going to look at gold as well. We're going to look at Nat Gas, and we're going to look at silver, and we're going to take a look at the situation with these assets and break down what I think is currently in play. Okay? So thanks for joining me this morning, and let's start looking, shall we? So, as you see on my chart, we have gold, and we've been talking about this daily chart for some time, holding this this range. We've got supply up above, we got demand down below, and we're watching to see which one is going to break. So on the 4-hour chart, we had an ascending structure that was created just recently. Let me point that out in case you don't see it. Here's the ascending structure that was created. It's not much of one, but it's still one. And as we can see, it has broken out of that ascending structure. And this is what we have currently, all right? So does this mean that now we're going to get a move to the downside? It doesn't mean that, but it's something to watch, okay? Because if this does drop down here and surpass this low, we will have a descending structure here. And that will be a good sign for potential move lower through that area of demand that we have on the daily chart. Okay, so this is a chart that I'm watching this week to see if that move's going to take place, because you could see we have an area here that has been contacted a few times, 1, 2, 3 times, and it's holding quite well. So if it continues to hold, you know, it can definitely drop price and create that descending structure that I just finished talking about. All right, so I'm going to be watching that to see if gold wants to do that. It's difficult to tell if it's going to do that right now because the circumstances on the charts are just not ideal for predicting movement, okay? But this is the situation that we got. Let's take a look at oil. Now, oil, if you watch the latest CFTC analysis video that I did, you'd know that we had a bullish bias on oil, and so we're now getting that move to the upside. Okay, so if you're wondering why the strength in price, well, the last area of significant buying or selling that we had was on the weekly chart, and it was buying. Okay, so you could take a look here and see that we had a buying zone here. It came down, contacted a second time. So remember, demand is still in play. We don't have supply located anywhere on the chart until up here. So technically, price could rally up there. Am I thinking about going long oil? No. Will I take it into consideration when examining the other charts? Yes, I will. And we talked about the relationship between oil and the USCAD, and the circumstances that the USCAD is sitting in at this current time. So there's a good relationship there between the two. Okay, let's take a look at silver. So silver is another one that I'm watching for a move to the upside. We had long signals lower on the chart. We have a take profit that was contacted here. Let me just point that out here. We had a take profit here on silver. And it broke through this significant area here that we were watching. It broke through, came to the upside, and now it's holding this area, okay? which is a good sign. If it continues to hold this area, I'm looking at this area similarly to how I'm looking at the daily chart of gold and that area of demand that we have on the daily chart to see if it holds. I'm watching this area to see if it holds. If we start seeing structures being built to the upside, then we're very likely going to see a continuation of silver higher. My long-term forecast is that silver continues going higher over time. All right, take a look at this one. Talk about timing the markets. They say you can't time the markets. Well, I say that's nonsense. Because take a look at this, okay? Let me show you something. So we had a long signal here. Long signal, okay? And then we had targets, 2 targets. One target here, the second target here. Why were those our 2 targets? Well, we had reasons for those 2 targets, but why did we have this as our last and final target? The reason being was because it was at this point in the chart that we suspected price was going to drop. Why? From institutional profit taking, okay? This is, and look, the proof is in the pudding, okay? Look what happened after the target was hit. What do you think's been happening with price? Profit taking. This is why price is dropping, is from the profit taking from the major institutions. So this is the power of analyzing the charts and understanding the supply and demand dynamics of the big institutions. When you understand where the big institutions are buying and where they are likely going to be taking profits, then you can select your targets very accurately and very precisely. So now we're having a sell-off, okay? And on the way down, we had an area of supply. This was the signal here, okay? This was the signal. Take a look, okay? This is our entry point here, and our stop loss was underneath here. Look how small the risk was compared to the reward for the final target. It's pretty incredible. So now we have institutional supply coming into play. Okay, remember this is the 4-hour chart. So this is short-term supply, but still supply coming into play. And as you can see, an institutional demand area has been removed. This is telling us that the banks short-term want to continue pushing price lower. And I suspect that that's exactly what's going to take place over this week. And next week, we're going to see a slow decline on natural gas. Eventually, I suspect it's going to be a good chart to buy back in, but I'm not interested in buying it at this point. I'm going to let it decline. I think it's got a long way to decline. Okay, I think it still has quite a distance to go. But all the indicators so far are telling me bearish on Nat Gas and let it continue to drop, because the higher odds trade is longs. Okay, the higher odds trades are longs. So I'm going to wait for long opportunities to present itself again. All right. So this one's still sitting pretty much in the range. I mean, it's not doing much, is it? And take a look. We had this supply area right here, and I took a trade based off of this supply holding. It started to work. We had targets just a little bit lower. It just missed it by a hair. Price turned up, provided this big emotional trading right through the area of supply, coming back, and now it's sitting inside supply again. So for me, this supply is still in play. It's still the main driving factor for price. Does it mean price is going to drop from here now? No, it doesn't mean that. In fact, we have uncovered some evidence to suggest that over time, the euro is going to be stronger. Okay? The bias is bullish. When examining all the major currencies, the CFTC data, putting it all together, excuse me, putting that all together, the bias is bullish, actually. Okay, bullish bias. Let's take a look at USCAD. So USCAD, as I was mentioning, there's a relationship between the Canadian dollar and oil. Oil's getting stronger right now, as we were looking at. And my main focus here is on this daily chart. We have this, not the greatest trend line here, but it is a trend line nonetheless. And I think it's going to play an important role in price action soon. Why is that? It's because I believe that over time we're going to be seeing a drop in price. And if that's the case, I think this trend line is going to play a pivotal role in the momentum picking up. Because this has been holding up price on the daily chart for quite some time, as you can see. All right, it's been holding price up here. And I think once price gets down to this trend line and breaks it, we could see momentum kick in really aggressively. And it's time for it, because retail traders, the institutional traders are reaching maximum positions, and they're not going to be able to add longs anymore. So eventually they're going to have to give that position up, and that's going to be what's going to trigger the move lower in price. Now, US dollar, Japanese yen. I see some people starting to short US dollar, Japanese yen. I would not even consider shorting it right now. I don't know why anybody would consider shorting it right now. Okay. Let's just go through this. Let's just go through a little example here, a little experiment here, something just to show you the circumstances of this chart. Right? When we look at the 4-hour chart, is that bullish, bearish, or neutral? Bullish. Okay. If we look at the daily chart, is it bullish, bearish, or neutral? Bullish. If we look at the weekly chart, what bias would we have? Bullish. If we looked at the monthly chart, what bias would we have? Bullish. Okay. So what is happening on the charts there that would give you any indication that you should be shorting? Anything? I mean, don't trade what you think. You trade what you see with your own eyes. Okay? It has to make logical sense. If everything is upwards, all the trends are up, price action is up, why would you short? You know, so here at the school, we'll teach you about structures, about trends. Just because price is moving upwards, it doesn't mean it's upward trending. Okay, it doesn't mean it's an uptrend. It could be just a upward structure. There's a difference between an upward structure and an upward trend. Big difference. If you don't know the difference, these are the details about trading that you have to understand. So I look at the 4-hour chart and I see that it's moving up. Okay. And if I open this up here like this, okay, and give you a bigger view of what's going on here, this is the circumstances. All right. And let me see. Yeah, it's hard to tell. But I'm looking at areas like this. And that's the only one that really catches my attention. Other than that, I don't see any significant ascending trend lines here. I mean, we have one back here, but this is very low quality. So what I'm looking for is any indication that this chart becomes bearish. And because of the lack of proper structure on this chart, I would not be basing a short position off of the 4-hour chart. Just my personal opinion. As for the daily chart, we have a nice ascending structure here. Nice trend to the upside. We had a magic zone that came into play, and we see prices pushing to the upside. So first things first, I would not be interested in shorting until this trend line is removed. Personal opinion. Okay. I need to see price come down to here and break this structure. At that point, this ascending structure that we have, okay, will turn to a neutral structure. That'll be a good indication that price is ready to drop, but not a signal just yet. So we have a really important area of demand that came into play back here. So I'd be watching that, and I'd be watching to see if they were going to reuse that area to propel price higher or remove it. If they removed it and they created a nice descending structure, then I would be looking for shorts, okay? Because then price action is telling me that over the short to medium term, pressure is going to be to the downside. Shorting up where price is right now, you're basically rolling the dice. You're expecting something like this to unfold. You have no proof that it's going to unfold, no idea whether or not it's going to unfold. That's just rolling the dice and hoping that it does. You'll lose your money that way. The vast majority of times. You may get lucky once in a while because you're thinking to yourself, oh, but I want to catch price at the highest point. No, don't worry about the highest point. You don't know where the highest point is. It can go higher from here easily. And I'm seeing some indications that are showing that it will do that. So don't do that. Wait until the chart gives you a clear signal that it's going down and then get in. Because once it's creating a downward structure like this, it'll produce a small area of supply, which you can use to time your entries. You'll have your stop loss above, your entry will be right there, and your risk can be very minimal, all right? It's controlled risk, not shorting up here. Where are you going to put your stop loss? You're going to add to your position if it goes against you? Like, before you know it, you're risking a lot more than you had originally ever intended. So here, in a situation like this, it's controlled risk. You know where to get in, you know where your stop loss is, and you know where your targets will be. Okay? It's all about controlling your risk and getting a nice risk to reward on your trade. Don't think about the highest point. Don't forget that. Get that out of your mind. Or getting in long at the lowest point. Forget that. It's about knowing exactly where the chart's going with high probability, finding the zone that the institutions are going to use to help facilitate that move, and getting in with them and riding that wave. All right, so that is my thoughts on the US dollar Japanese yen. Okay, wanted to pass that along because, like I said, I'm seeing a lot of people online talking about shorting US dollar Japanese yen and getting in short, and to me that's just looking for trouble. Okay, anyways, that's it for today. Hope you enjoyed it. If you enjoy the rest of your day, I'll see you in the Telegram channel. Take care and arrivederci.